Okay, let's unpack this. We're doing a deep dive into a really interesting bit of trading psychology today.
Yeah, this one definitely makes you think. It kind of flips the script on what you normally hear about needing, absolute conviction.
Right. The core idea here is the potential power, maybe even the necessity of consciously believing, I don't know.
Mm-hmm. And we're not talking about being unprepared or just guessing.
No, exactly. It's a specific mindset adopted after all the analysis. So our goal here is to figure out how this acceptance of uncertainty could actually lead to better decisions, more objective ones.
And help sidestep some common psychological traps traders fall into.
Okay, so let's get straight into the main premise. It talks about the conscious trader.
Right. So this trader, they've done their homework, they've got their analysis, their strategy, their edge, whatever you want to call it.
They've identified why they should take a trade.
Yes. But even then, the core belief they hold on to is, I still don't know what the market will actually do on this specific trade.
But hang on, that feels, almost self-defeating, doesn't it? If you found an edge, a statistical advantage, doesn't saying, I don't know, kind of undermine the confidence in that edge.
See, that's the critical point.
Yeah.
It's not about undermining the edge's validity over time. It's about being truthful about probability.
Okay.
Your analysis, your edge, it gives you a probability. Right? A likely win-loss ratio over, say, 100 trades.
Right, over a series.
Exactly. It tells you the edge should work out across a larger sample.
Okay.
But for this one trade, the outcome is still genuinely unknown. It could be a winner, could be a loser within that series.
I see. So the process works statistically, you just accept you can't know the result of this specific instance beforehand.
Precisely. And living with that truth, really internalizing, I don't know about this one, has a massive psychological benefit.
Okay, how so? What does it actually do for the trader?
Well, the big thing is it neutralizes rigid expectations about what the market has to do right now, just because you entered.
Okay. So you might have a reason, your setup, suggesting a potential move.
Right. You anticipate a possibility based on your criteria being met. But you don't have that ironclad belief that it must go up X points immediately.
Because you've already accepted. You don't know for sure.
Exactly. And if you don't have that rigid expectation,
then you're never really surprised.
Bingo. You're never genuinely surprised by what the market does. Whether it moves your way sideways or straight against you, it doesn't violate a core expectation because you didn't hold one for this single outcome.
Okay, so let's say the market does move against you. The pattern breaks down, the reason for the trade disappears.
You can see that objectively. You could just recognize, okay, the conditions for my edge are no longer present.
Without the usual sting of, oh no, I was wrong.
Yes, because you weren't attached to being right on this specific trade.
Yeah.
There's no psychological pain from being surprised or having an expectation shattered.
And if there's no pain,
there's nothing your mind needs to instinctively avoid or defend against. You're not tempted to hope a loser turns around out of desperation or frees up fearing the loss.
That makes a lot of sense. It stops that emotional downward spiral.
It does. It prevents that kind of psychological collapse because you're detached from the individual outcome. You're not fighting the market's reality on this trade.
Because you already accepted you didn't know what it would do.
Mm-hmm. So the practical result, if you see the price action isn't matching your criteria anymore,
you get out.
You just exit. Simple as that. It's an objective decision based on your process.
Yeah.
No big internal drama. You close the trade, and you're mentally free and clear, ready for the next signal.
Okay, so summing this up for you, our listener, the big takeaway here is that this belief, it shifts your whole focus.
Right. It moves you away from the stressful game of predicting short-term outcomes.
And puts you squarely into executing a defined process based on probabilities that work out over the long haul.
And that shift is really powerful. It aligns how you feel internally with the actual reality of uncertainty. That builds, emotional resilience.
Yeah, resilience and the ability to act objectively consistently, which is valuable way beyond just trading, right?
Absolutely. Any field where outcomes are probabilistic, not guaranteed, even with great preparation.
Understanding this, it really can change how you look at uncertainty and risk. It kind of frees you from needing to be right every single time.
Which leads to maybe a final thought for you to mull over.
Go on.
How might things change for you if you truly adopted the belief that, despite all your best efforts, you genuinely don't know the guaranteed outcome of your next big project, your next presentation, even maybe your next important conversation? How would that change your response when things don't go exactly as planned?